So, yeah, so, I started off as a student of chartered accountancy in Mumbai in 1983. I passed out, and after that, I was a village boy from Raipur, Chhattisgarh, and came to Mumbai to do CA. Stuck to look at the journey of the country. I mean, I have traveled everything, what we see here. So in '83, I pass out and do equity research. When it was not heard of, equity research was not their profession. I did equity research till '85, and then I decided to start my own, and we started Raamdeo Aggarwal. I found Moti in asking for a ride from me on a motorcycle, and we both came together and started this venture Raamdeo Aggarwal in '87. From '87 till 1990, we worked very hard. One thing I made sure is that we pay full taxes so that the department doesn't trouble us. So, I mean, that was the one thing which was very important right from beginning. We paid full taxes. We earned 2 lakhs, 3 lakhs, whatever. We paid full taxes. But because of full taxes, I had only 15 lakhs after 4 years. So that was not sufficient. And in the stock market, if you have not a lot of capital, 0 multiplied by anything is 0. So you need capital. So how do you get from 0 to some capital? So we had 15 lakhs, we borrowed 10 lakhs, and we bought the membership of Bombay Stock Exchange. That was in 1990. And the moment we bought the membership in 1990, the famous Harshad Mehta bull run happened. And in next 20 months, we made 30 crores. And no speculation, I'm telling you. We never speculated, we never borrowed any money. But because of the what happened was so unprecedented that, like stocks were doubling almost every 10 days, 15 days. And so we had a huge momentum. So by 1992 March, we had 30 crores. Then the collapse had to happen, it collapsed. And that 30 crore became 10 crores. And then we had a tough time for 2-3 years. But then 10 crore was also a lot of money. It was a lot of money, And I had never seen a crore, and I had 10 crores. So we never felt bad. That a lot of people, they ask me when 30 became 10, did you feel bad? I said we never realized. Because we didn't know what is 30, we didn't know what is 10. 10 was a lot of money. Then we started doing research. We set up research office bigger than our corporate office. And that time the so-called liberation happened, the delicensing happened. We didn't understand all these words. Globalization started happening. Foreigners started coming in. And we were working very hard. There was no index, there was no cable TV, there were no books, no magazines, nothing. It was a world of ignorance. And we are king of ignorance. So we had a lot of fun. And then, then the Y2K happened. Suddenly we started going to America. I met my guru in 1994. I went to Omaha. When first time I saw his annual report, I read it, and then I realized, I used to think I'm a very smart guy in stock market, and I had read all the balance sheets. I knew everything about every company, but I didn't know investing. Investing is very different. Investing is a science. It is an art. You have to be, it cannot be taught in one day. You have to pay the tuition fee, you have to pay your life, you have to pay your tuition fee, you have to commit mistakes, and whole lot of things you have to do, and still you may not be able to find the end of the tunnel. So still investing is very, so I took up that challenge, and we started, once I met him, then I realized that showed the way how to go about learning investing. I read all the letters, and we started writing Wealth Creation Studies. So by 2000, what happened was this, again, the second bull run happened in India. Look at the irony of Indian markets. 92 bull run, no reason why it happened. You can keep explaining why it happened, but there was no reason for unprecedented bull run to happen in 92. Again, in Y2K, it was most irrational. In US, when I used to go there, I used to tell them, guys, we have full experience of the kind of bull run you are doing today in 2000. You are going to have very bad outcome. And again, the same thing happened. My portfolio went from same, the 10 crore became 100 crores. And then 100 again collapsed to 30 crores. Second time collapse of 70%. Then in 2002-03, it was very, very depressing. We incurred loss for a few months, and industry was also in bad shape. Industrial growth came down. Everything was very depressing in 2003. And when everybody gave up, then the mother of all the bull run started. The global credit, because of 9/11, Greenspan printed money, and just the whole thing started floating. And in next 4 years, between 3 and 7, my company, this is my portfolio, my company grew from 10 crores to 1000 crores and we made 300 crores profit in Motilal Oswal. That's a separate thing. But this portfolio went from 30 crores to 450 crores. Then again it collapsed from there. Again it collapsed 50% in 2007. It came to 225 and since then we have been steadily building it up and now the actual number is about 1550. This is a slightly dated number, 1300, so it's 1550. So you know, what I'm saying is this entire journey of making money in the stock market. See, one thing is people don't want this up and down. People want a straight line like a bond, but you don't get 30-35%. You get about 7-8%. And 7-8% in 20 years and 30% in 20 years. You can do your numbers. These are two different things altogether. So, so what we did in '94 after meeting Buffett, you know, search for investment philosophy started. So in the stock market all over the world, you go particularly in US because that's the mother of capitalism and that's where trillions are being managed. If you want to get billions managed, you come to Singapore, Hong Kong. When you want to manage trillions, you go to US. That's the only place. So there you get all the theories in Wharton, Harvard, all these Wall Street guys in the evening. You can talk and you find all the theories happening there. So because for every theory to be written, you need a new theory. And new theories come from US only. Most of the new theories come from US. We are trying to get a new theory from India itself because we need a theory which suits Indian climate. So we started doing wealth creation studies. So these 21 wealth creation studies, they are the seminal studies which shaped our mind year after year, year after year. Because markets are adaptive. Markets are changing every day. Market has no memory. See, you have memory of markets. Market has no memory of itself. They start every day morning at 9:30 and they don't know what happened yesterday. We know what has happened because we are a human being. We live with 50, 60, 70 years of memory. We lost money sometime in some stock. Market doesn't know you lost it because the stock doesn't know you own the stock. You know, that's the unfortunate part. So markets keep evolving every day and we did the wealth creation study and few landmark studies I'll mention. We have just tell me when I have to stop.
Yeah.
I know it is 20 minutes. There is no counter here, but I will try to wrap up as fast. So, you know, one of the landmark studies is about, you know, stock market is about just two things, price and value. Price is what you pay, value is what you get. Okay, this is the biggest quote of Buffett. Price is what you pay, value is what you get. Everybody knows the price of every stock. Nobody knows value of any stock. Most of the promoters themselves don't know value of their own company. That's where the analysts come in picture. So, Professor Greenwald, in his value investing book, he wrote how to calculate value. This is the only book which kind of gives a mathematical framework of how to calculate value. He said there are three sources of value: breakup value, earnings power value, and growth value. So, in this atmosphere of high intangibles, you can crunch the two buckets of earnings power value and asset replacement value, and growth value can be second bucket. So you can say current profits and future profits. So current profits are known to everybody. Nobody knows the future profit. And there is no book to figure out which company is going to make how much profit. It is all in the minds of the people who are buying. And that's why everybody's estimate is different and hence everybody's estimate of value is different. So 50% is for the current profit, that is a science. If I tell you a company makes 100 crores, you will say the price should be say 1000 crores. That's done. But if I say the same company is going to make 200 crores in next 3 years, then you might say I am willing to pay 1500 crores, somebody will say 1600 crores, somebody will say 2000 crores. It all depends on the estimate of value. So the value is being estimated in every single investor's mind, which is very different from the price. Price is common to everybody. So there are a little more things, but this is the one study we did where we figured out how to estimate value, and we go exactly about that. We keep whenever I meet a management, my only job in 1 hour, 55 minutes, I keep figuring out how much he's going to grow because I know what all he's doing till date. There's so many presentations, so many con calls, so many quarterlies. We have to focus on how much he's going to earn in next 5-10 years, and he is going to make as much as he wants to make. Most of the managements are not able to earn more than what they plan to earn. In fact, they earn much lesser than what they plan to earn. But let me figure out how much he's planning to earn. This is the best he wrote in 2007 annual report, Great, Good, Gruesome. There are 3 types of business in the world. He started buying stock. He was born in 1930. Buffett started buying in 1941. In 2007, after 60 years, he realized there are only 3 types of business in the world: great, good, gruesome. So what is this? These are 3 bank accounts. Good companies are the companies which earn about 20% return on equity. So you put 100 crores, you make 20%, 20 crores. If you want to double the profit, you have to put another 100 crores. So that's a good business. Cost of money is 10%, you earn 20%. What is a great business? A great business is start with 100 crores. First you earn 20, then 25, 30, 40, 50, 60, 100, and literally unlimited. You only make money. You don't need to have capital. There are very few companies like that. Hero Honda, Indigo, Nestle, Lever, Cadbury's. These are the companies. There are some 40, 50 companies. They don't need any capital to make money. So they are great companies. If you have in your portfolios ITCs of the world, they are going to mint money for you irrespective of whatever is the price today. So those are the few. So you have to invest in good and great. And they are about 10% of the companies. Out of 4,400 companies come to this category. Rest of 3,600 are useless for long-term investing. In investing, you can do punting. In investing, time is a friend of good companies and equally big enemy of bad companies. Never have bad companies in your portfolio. Value migration. This is another big concept where, most of the money in Indian stock market is made because of this particular concept. This is a book written by Professor Adrian Slovetsky of Harvard. Somehow this book didn't become famous. That is the best thing to happen. I have explored it fully. This book, you must go to the YouTube, you can listen to him for half an hour. This is about value migrates from outmoded business model to superior business model. So from public sector undertaking, public sector banks to private sector bank, from Boston to Bangalore, from wired phone to wireless phone. So all sorts of value migration we keep seeing. Whenever you see a new value migration, you must buy the company of the new, like say DMart. DMart is the recipient of the new from unorganized retail to organized retail. So that's why you see the kind of valuation you are getting. So you have to keep looking for the new business models and invest ahead of time and sit there. So what excites us about it? This is the last paper I wrote in 2008. This is India, the next trillion-dollar opportunity. This must be the most exciting thing which keeps us very, very bullish about the India. And this is the only macro piece which we talk about. So India took 60 years from 47 to 2007 to become a trillion-dollar economy. And per capita became $1,000 per capita. Then the next $1 trillion came last year. So we are $2 trillion economy. Third will come in 5, fourth will come in 3, and 6th or 7th will come in 1 year. What has taken 60 years, it will happen in 1 year. And this is going to happen irrespective of who is sitting in Delhi or Maharashtra or anywhere. It is happening. It is happening because of you and me. So have faith in this. This is like a demographics. This is happening. What it does, at $1,000, 100 is discretionary, 900 is essential. Corporate activity is all in 100. When you go to double, when per capita doubles, your discretionary remain 1,000 and your essentials remain 1,000, discretionaries go to 1,000. So what is the doubling of GDP is exponential growth for the discretionaries. And that is where most of the businesses are making money, and it happens once in a lifetime of the country. China achieved $1 trillion in 98, and you see what has happened in 20 years. India achieved in 2008, then 2008 to 2028 to 30. So we have another 12 years. This is the biggest golden period of Indian economy. We have newer ways of spoiling it, but this is one of the best opportunity India can ever have. In this period, I wrote a paper last week. The domestic savings, which was about 5.5 trillion last 10 years, is going to be at least 12 to 15 trillions. 12 to 15 trillion. You can imagine the insurance companies, broking companies, mutual fund companies, they are going to have gala time. You cannot imagine what kind of a boom they are sitting on. $12 trillion to be saved, and this is a country which doesn't know how to spend money except for the marriages. So everybody is going to die rich, and filthy rich, I'm telling you. So all the wealth managers and all, they'll have great time. So, and if it is used imaginatively by the government is managing poverty. Actually, this is a time to manage prosperity. This $12-15 trillion can solve your jobs problem, it can solve your infrastructure problem, all sorts of, you don't have to go to Japan or anywhere. This money is sufficient if you channel it properly. If we keep buying gold, land is speculation, nothing is going to happen. So we have to figure out how to use this $12 trillion very, very imaginatively. So how do you make money in this kind of environment? This is what exactly we try to do. So we call it winner categories and category winners. So businesses which are going to win, you position your portfolio over there. And in them, the winner companies, like say till now it is a motorcycle company. Now it is a car opportunity. Car will go faster than motorcycle. China was doing 1 million cars when we are doing 1,000,000. Today, China is doing 28 million cars. We are doing 3 million. I asked Mr. Bhagwa, what is going to happen in next 10, 12 years? He says, we cannot do 24 because we don't have roads, but we'll do 12, 15. I said, 1 out of 2 cars is Maruti. Are you going to do 6 million? We have planned for that. Can you believe this? So this is the kind of opportunity you are looking at. I mean, they need literally 1 factory every year if car demand grows by 10, 12%. And if it grows by chance, for some reason at 20%, there will be stock out. Already there is stock out in many products. So we have to find the categories, and India is one interesting place where growth is ahead, and yet the consolidation in the many industries are like this. Every single segment of automotive is 50%, truck, telco is 50%, tractor, Mahindra is 50%, motorcycle, Hero Honda is 50%, Hero Motorcorp, sorry. So you name it, paints, Asian Paint is 60%. All the growth is ahead, and yet you have got consolidated companies like this. So these are the massive opportunities to invest and build a wonderful portfolio for next 10, 15, 20 years. This is the only market which is up 100 times in last 30 years. Every 30 years it goes 100 times, and there is no reason to believe the next 30 years not going to be as exciting. I have spent 30 years in the market. I have seen when I started buying a stock, it was 100 Sensex. Today is 32,000. So right in front of me, market has gone up by 320 times. And I can see some more senior people, they must have seen from maybe 50 or 60 to 32,000. So there is no reason to believe that there is a long-term case for bearishness. So this all day, with all this wealth creation study, we found our philosophy called QGLP, quality, growth, longevity at reasonable price. This is one filter which allows me to say this 20 company I want to have in portfolio, and 3,980 companies we just want to say no. So this is a full subject to talk about, but this is just a mention I'm doing. And the result of all that is the wonderful performance of all our products in our AMC. And this has taken us from, in last 4 years, from literally 1,000, 1,500 crores to more like 30,000 crores, the money I'm managing. So now current perspectives, current markets. One other thing is that somebody asked me a week back, what have you learned in 30, 40 years of stock market? I said, never time the market. The biggest cancer, not only in India, all over the world, is that, when to enter the market, what to buy, when to buy. And by doing that, the cost of waiting to enter the market has been so expensive. Even if you get it right, it's not worth it. It's not worth it, I'm telling you. The best time is to, whenever you have the money, that is the time to get in, and whenever you need the money, sell it. So, currently markets are pricey. Let me tell you, markets are definitely pricey in the short run. And one of the reasons is corporate profit to GDP. See, Buffett gave this formula, how to look at the markets. So in 2000, he wrote Buffett on Markets in Fortune magazine. And he gave this formula, look at corporate profit to GDP. So our corporate profit to GDP has been climbing to about 7.5%, 8% in 2007. Now it has come down to 2.9. Maybe it might be 2.8 this year. So this is really, really below average. And US is right now at about 10%, at an absolute all-time high. Because in the fight of capital and labor, capital is completely lost out. Zero capital, cost of capital, and hence corporate profits are at all-time high in US. In India, it is literally all-time low. So you are giving high P multiple to you are giving high P multiple to low profitability. So out of the two engines of market, one is the P and second is the earnings. P is at a full blast. At 2025, you have it. But earnings are half. So that engine still remains to be fired up. Markets are trading about 80% to GDP, which is also, US is trading at 1.55. And we are trading at 0.9. And we are supposed to be the fastest growing economy in the world. So there is some disconnect. So there is a lot of scope for Indian markets to climb up market cap to GDP as the earnings come in. Right now, as this dark blue line is about the P of the market is about 2023, which is little above the mean of about 17, 18. But you see, the markets are moving only with that. So only P is driving the market right now, not the earnings. As the earnings come, none of the bull markets, none of the economic cycle ever get over unless earning blast comes. So I have an eternal faith that this earning blast will come, things will stabilize, and corporates, there will be, Lalapulaja effect will come, and we will grow. When it will happen, how big it will happen, how far it is away, I have no clue. It is expected by the analysts that earnings, which is stagnant for last 4 years, is likely to blast off in next 2 years. But that has been happening for last so many. So in conclusion, big fortune is never made in a straight line, whether in business or in stock market. Buffett says, if you can't sustain a 50% correction in your fortune in the stock market, you don't belong to the equity game. A well-articulated investment philosophy is critical for stock selection, allocation and monitoring. In next 10 to 15 years, Indian economy will throw up exponential opportunities in both old as well as new economies. $12 trillion savings boom, if used immediately, can significantly improve prospects of jobs and infrastructure. The Indian stock market is pricey in the short run, but long-run prospects will still remain very, very promising. Thank you very much.